Howdy there, folks. Welcome into today's video. We got a few subjects to speak about in this one. At the top of this video, I got a few random things to show you that I thought were interesting out there. Then we're going to go through Home Depot earnings. Home Depot, one of the most important companies you could ever look at in relation to understanding how the U.S. economy is doing. We're going to go through their financial statements. I'm going to show you some very troubling things in Home Depot earnings that came out this morning, okay? And we'll speak about that. We'll speak about what that means for the U.S. economy, all those sorts of things, okay? And then I'm going to share a stock, brand new stock I've just bought. I bought over $10,000 worth of this stock, and I'm going to share, why did I start a position in this stock now? Where does this rank as far as my importance for stocks that I'm personally buying right now? And kind of my thoughts on this company over the next, let's call it 3 to 5 years. And so, yeah, busy video. Appreciate everybody being subscribed as always. Thanks so much for being here, folks. And by the way, if you make over 6 figures a year, I put together a free workshop for you that will be pinned comment down there if you want access to that. I put that together last week. That's about investing in 2023 and beyond with a 6-figure income, okay? Alrighty, so, this is random. I saw this here today. One's valued at nearly $6 billion. Vice files for bankruptcy. And I saw that and I was just like, man, I remember 5-10 years ago, Vice was just so huge. It was everywhere. It was everywhere, man. And to see them go under now at this point in time just goes to kind of show you the time period we're going through right now. Let's put it that way. And man, when you really look into the story a little bit and you look at some of the backers of Vice, talking about some heavy hitters, some huge people in terms of folks that are, let's call it, very famous in the media industry and some very high net worth individuals. I was actually really surprised by the backers there, okay? If you can't find an affordable home, they're out there, okay? You just got to move to random villages in Italy now at this point in time, okay? Italy is basically even paying people to move to some of these old ghost towns, which is fascinating, man. I don't know if you guys have heard this before, but yeah, if you want a place for cheap, go to a ghost town in Italy and you can get a place for cheap. I don't know what this person's thinking, okay? Man, they must really care about their place. A house in Australia has rejected offers to purchase it for $50 million. They ended up building a whole suburbs around this one house. I'm like, you got to be flipping my flapjacks, man. Shoot. You give me $50 million for that, I'll gladly take that in a heartbeat, man, and I'll go somewhere else. Let's just put it that way, okay? $50 million. And last random thing here, meet the typical private jet owner. They're a male who's over 50 and a net worth of about $190 million. So, yeah, if you're less than 50 years old and you don't have that sort of net worth and your net worth is a fraction, don't buy a PJ. That's all I'll say about that, okay? Alrighty, guys, so Home Depot. Oh, boy. Not good. All right, so Home Depot here. Net sales down about 4.2%. So obviously, you don't want to see revenue going down like that, 4.2%. The worst part of that is you can say, well, in the economy, we've had inflation of, let's say, I don't know, we can throw a number out there, 6% over the past year. You can say maybe it's 7%, whatever, okay? So let's say it's 6%. So if everything's gotten about 6% more expensive, then really there's a net difference of about 10% in terms of Home Depot's revenues, right? I mean, imagine if everything stayed flat pricing, right? And prices didn't move up, then you could say there was maybe a scenario where Home Depot's revenues would have been down 10% if you want to look at it from that angle, right? And so nonetheless, folks, I mean, that's troubling, but I actually gave them a blue on this because I'm surprised it's not worse. I mean, with how weak the real estate market is right now, I'm actually amazed that their revenue didn't come in worse. I'll be honest, okay? No, troubling is a gross profit actually fell more than their revenue fell, which is not something you want to see. Usually, if revenue is down 4.2%, you'd like this number to be down maybe 3.9%, 3.8%, 4.1%, something like that, okay? The fact that it's down more than revenue is not ideal. Operating income gets even more troubling. That was down 6.4%, so, quite a bit outstripping revenue as far as that goes. Net earnings down 8.5%. So now we're talking about this is over a double up in terms of how much this number's down versus revenue down here, okay? Not good at all. Basic earnings per share down about 6.8%. So reds across the board. Obviously, there's weakness in Home Depot's business in a substantial way, which doesn't surprise me whatsoever. This is something I thought was going to happen, and this is one of many reasons why going into this year, I hedged with SDOW. Because Home Depot is a very big weight in the Dow Jones Industrial Average, and I thought Home Depot would be very weak this entire year. And I don't think this is going to fix itself. I think Home Depot is going to continue to report very, very troubling numbers for likely the remainder of this year. But I'm actually, I think it could be a lot worse for Home Depot. I think it could be a lot worse for Home Depot, okay? Now, this goes to show you where weakness is coming. Customer transactions, that's where the whole weakness is coming. Customer transactions were down 4.8% on a year-over-year basis, almost 5%, right? Average ticket actually grew slightly. What this tells me is, you got to think about this for a moment. Have you ever moved in your life, okay? Have you ever moved out of an apartment, out of a home, whatever? What do you do when you move? You make 1,000 trips to Home Depot and Lowe's. Anybody that's ever moved in the United States of America, you know what I'm talking about, man. You have to get all this moving crap, okay? Whether it's boxes, whether it's bubble wrap, whether it's tape. And then when you move into your new place, you have to get a bunch of random new stuff, and you end up still going to Home Depot and Lowe's many times, okay? And so nonetheless, when you move, you're going to likely make a lot of trips to Home Depot and Lowe's. Well, obviously the real estate market's weaker, in a much weaker state. So if that's the situation, guess what? There's going to be less transactions at Home Depot. It's a very natural occurrence. And so it doesn't really surprise me. It's just kind of, you put the pieces of the puzzle together there, and it kind of makes sense. So, that's that. But that's not the most troubling thing with Home Depot. This, what I'm about to show you, is shocking. I mean, absolutely shocking what I'm about to show you here, okay? This is Home Depot's balance sheet. This might be the worst balance sheet, or certainly one of the worst balance sheets of a big dog company, a multi-hundred-billion-dollar market cap, okay? They barely have any stockholder equity on this company right now, okay? Barely have a positive stockholder equity. That's crazy. I mean, look at this. They have total assets of $76 billion, and they have total liabilities of $76 billion. They barely have any stockholder equity. And that's shocking because, I mean, that's just not something you usually see. You can go through the biggest big dog companies out there, and almost all of them are going to have stockholder equity of many billions of dollars, and some of them tens of billions of dollars, some of them $100 billion plus. To see a company like this barely have a positive stockholder equity, that just proves that management over time has loaded this company up with massive amounts of debt over the years, which is exactly what's happened. I mean, look at long-term debt, excluding current installments, over $40 billion. And the cash in this company is only $1.2 billion. I mean, it's amazing that a company like Home Depot, what is supposed to be seen as one of the most quality companies in the United States of America, has a balance sheet this bad. I mean, you can understand that if it's some, random stock that is some crap company. This is Home Depot we're talking about. This is one of the most prized possessions of the stock market. To have a balance sheet this bad is embarrassing for a company like that. And the thing with a balance sheet like this isn't going to fix itself in the short term. It's going to take a while to play out. And I mean, imagine there was some sort of scenario where the economy got really, really ugly for a few years. And imagine, I don't know if this is even realistic, if Home Depot was to actually take losses. But I mean, for a company like this is how these guys end up going bankrupt over time. And for a company like Home Depot, you better be taking Amazon serious. When Amazon gets down 1-2 hour delivery, which they will over the next few years, I'm telling you, it's going to be a whole lot more of a competitive threat to Home Depot. Amazon now has gotten to the point where I order something and it's at my house in less than 24 hours. They will get to a point where it's in my house within 2 hours. And when that happens, I can tell you Home Depot's in a world of hurt. And as crazy as it sounds, could Home Depot be a bankruptcy candidate someday? Folks, there are every retailer that has gone under over the past 10 to 20 years, there was a moment when people thought that company would never go under. They are giant. No way. I mean, this is ugly, man. And there's no fixing this in the short term. And this is a company with almost a $300 billion market cap on it. Almost $300 billion. I don't think people are taking into account on Wall Street the level of risk in Home Depot. And I think it should be something that is taken very serious, okay? And we'll see how this story plays out over the next 5, 10, 15 years. But this is going to be interesting. When you have that bad of a balance sheet and you're in your glory days right now, this is Home Depot's glory days. Let's be clear about that. And when you have this bad of a balance sheet in your glory days, what's going to be when your business is not in its glory days anymore? which could be the start of it. That's bad, man. So that's Home Depot, okay? Alrighty, next up here, let's talk about a stock. I'm just starting a baby position in here, and I plan to build this position bigger, and I'll kind of go through why I've started a position in this, what I'm planning on doing with this overall, and then where does this rank as far as my order of importance with stocks I'm buying. And that stock is RH. This is a stock that was down huge today. It was down about 8.7%, and I decided, well, this is the time, okay? We're going to get started here, okay? And so I went ahead and today I bought over $10,000 worth of RH stock to kind of start my position out here. It's roughly about a $5 billion market cap company. Low P, low forward P. Don't put too much weight into that because obviously that business is going through a really tough time right now. And if anything, I would expect them to be less profitable over the next year than they've been over the past year. That's my personal opinion on that. It could be different, but I'm expecting weakness to continue in this business, at least in the short term here, which is why I'm just finally starting a position. Now, the reason the stock was down big here today and why I could buy, shares for much cheaper than if I had bought yesterday, right, is because Big Buffet, okay, Mr. Warren Buffett, they did decide to sell RH stock, okay? Now, it's interesting, somebody on actually Seeking Alpha went ahead and kind of drew up, like, where Buffett was buying at in the past. And once again, we don't know if this was Warren Buffett buying it. It was Berkshire Hathaway, but it could have been Todd or Ted buying the stock. But it's interesting because it looks like they were buying a lot of shares. Obviously prior to Rona, they were loading up on some shares, and then they bought a lot of shares during Rona at very elevated prices, right? 24,000 shares there, 24,000 shares there. And I mean, at these prices, you're talking about $400, $500, $600, $700 a share nearly, right? 36,000 shares there, 25,000 shares, 353,000 shares added right there, right? Then they added another 190,000 shares last year, and then they just sold in mass, right? Which is very intriguing. And so we don't know if that was Buffett. RH, super high-end furniture company, right? I mean, Buffett, we know he doesn't care about any of that stuff, right? It's almost like if Warren Buffett bought Louis Vuitton, like LVMH. It's like, it's not really his cup of tea. So I was surprised. It's a furniture company, but at the end of the day, it's not really like a Warren Buffett type stock. So nonetheless, I put absolutely no weight in whatever decision Buffett made if he had anything to do with this. It could have just been a short-term trade for Todd and Ted, and they're realizing, RH is going to be in a tough spot for the next, year or so, and they just don't want to be in it, and they're going to move their money elsewhere, right? Why is RH in the tough spot in the short term? Luxury home sales are awful. They're among the worst we've ever seen, I mean, to be quite frank. Luxury home sales basically sink record 45% on a year-over-year basis. Luxury home sales have plummeted. I mean, absolutely plummeted to levels that are honestly lower than even the great financial crisis. You can look back in these time periods in the past, right? And so it's awful for luxury home sales. And I believe luxury home sales will bottom this year, and then they'll start to recover, in my opinion, in 2024 and as we move into future years, right? But luxury home sales are just in a horrible, horrible place in the short term. But let's be honest, okay? When luxury home sales recover, whether that's in 2024 or 2025, depending upon which year you think recovery will start in, okay? Do you think RH stock is still going to be $200 then? Of course not, okay? People play these things out in the future. And so I believe there's going to be a comeback of luxury home real estate. And honestly, do think about it in this context, right? This matters, right? Luxury homes, okay? The type of people that are buying luxury homes, those people have the sort of money to spend at RH, regardless of if the economy is stronger, weaker, or anything in between, right? And so I think the best thing that could happen is actually a weaker economy, believe it or not, because what that will do is that will cause, obviously, the Fed to cut rates. Rates will cut substantially, and you'll actually see a massive pickup in the housing market, even in a recessionary scenario, which is very different than many other scenarios. And the bottom line for RH, they just need people moving. Like, the worst thing for RH is everybody just sitting in their current home, in their luxury home, and not deciding I want a different luxury home. Because when people decide to move, the chances they're going to purchase new furniture go up exponentially versus their current home, right? And that's just very common practice. Like even out of the luxury home market, somebody buys a middle class home. And what a lot of people do, hey, I don't want to move my old couch in there. That thing's ratted out. I want something nice, okay? And so they go to a furniture store and buy a new $1,000 couch. The same thing happens in the luxury market, just to much, much higher extent, right? And so I think that's something that's going to play out here over this next couple years. The company's led by Gary Friedman, who is a CEO I definitely like in a pretty big way, okay? he's a 2,448th richest person in the world right now. A net worth of just over 1.1 billion. Before it's all said and done, he might go under $1 billion club. We'll see what happens there, okay? And this is a man that has led RH on the public markets for many, many years and done tremendous, right? I mean, since his company went public back in, this was like, oh gosh, I think it was 2012, 2013, something like that. He took the company public. The stock's up 554%, even after this massive drop, right? He's done a great job leading this company and leading it through some tough times, right? Including when he came over to this company in 2001, it was nearly bankrupt. And they had no real strategy, and it was just a mess, right? And over the past 20 plus years, he's built a company now that is like the Louis Vuitton of furniture, and is climbing this hill of just the luxury landscape. And I just look at everything they're up to and everything they're doing, and I'm like, oh my gosh, this is freaking genius. When you look at their luxury hotel brands they're building now, they even are, now have a luxury yacht, and just everything they're doing. Their high-end restaurants that are starting to be on top of many of their, their furniture stores and whatnot. Super high-end restaurants that have very good food. I went to a few of them now. I went to one in, what's it called? It's a little outside of San Francisco. Is it Marin? For my people that live in Northern California, you know what I'm talking about. I think it's called Marin. I went to that one. Great service, great food, great ambience. And I went to one in Charlotte, North Carolina as well. Same exact thing. And obviously I've gone to a lot of RH stores over time in Arizona. And, obviously here in Vegas as well. We got a nice store in Summerlin. And so when I look at RH and what they're doing there, it's brilliant, right? And why is it smart to have a nice restaurant on top of a furniture store, right? Well, think about it this way, okay? What are they doing with that? They're attracting a lot of people with money to come eat at RH. It's a cool place to go eat. It's beautiful. I mean, you go to the Marin one, I think it's Marin. The views were tremendous. Like on top of this building, I'm like, oh my gosh, this is gorgeous. And the place was packed. I went last year and I was like, oh my gosh, the one in Charlotte, North Carolina, same exact thing. And the place was packed. We had to wait like over an hour for a table I think it was a weekday afternoon we went. I was like, are you flipping my flapjacks? Like, this is ridiculous. But people with money love to go there. And so naturally, people go there, have a great time, and then they spend some time browsing around on the furniture, right? And where else are you really going to do that and attract that sort of high-end clientele? And so I think Gary Friedman's just thinking about all these different concepts and ways of getting high net worth individuals or let's just call it higher net worth individuals to be attracted to the brand and, take a look at it and be around the brand. And I think it's absolutely genius. I love what he's doing there. The concepts in his whole thinking is just so much different than almost anybody you'll find. The only one I can tell you, the only person I've ever seen who has his sort of mindset is Steve Wynn, who I had tremendous amount of respect for. And Wynn stock that ultimately treated me very well over the years, and despite going through, obviously, Rona and everything like that, right? And Steve Wynn had just outside-the-box concepts and long-term thought processes on what he could do with spaces, what he could do with attracting VIP clientele, high net worth individuals, and giving them experiences, showing them beauty that is just unparalleled, that you're not going to get out there. And something I always appreciated with the Wynn and the Encore is it's just the highest of the highest end in terms of the Las Vegas Strip. There's no one that spent that sort of money on their buildings. There's no one that went to that level of detail, and I see every single detail. Like, I'll notice the counters, and I'll notice the walls, and I notice like every little detail, and just no one went to that level that Wynn went to. And I think Gary Friedman is the closest thing we have to a Steve Wynn. And when I hear this man talk, and I see the visions, and I see what he's up to, and I see what he's doing, I mean, it's just like, it's so beyond what anybody else is really capable of, or even the thought processes that anybody's capable of in the luxury space. And to do luxury, you've got to think so much differently, because everybody else is thinking about, how do I sell, my product to as many people as possible, and get it to them as affordable as possible, and and just make money, right? And that's 99% of businesses. And you have these kind of freak ones. Wynn was a good example. Steve Wynn, Gary Friedman, the gentleman that leads Louis Vuitton, right? LVMH, he's done that as well. It's a whole different thought process and positioning of the product, and just it's beautiful, okay? And so nonetheless, he's done a great job leading the company over time. He's a proven executive that's taken a company that was nearly bankrupt into this incredible company that is going to be likely very lasting for the long term in regards to this, right? Now, where does an RH rank in terms of my most important stocks I would even be buying, okay? I can tell you there's two stocks I have definitely ahead of RH right now in terms of importance of buying, okay? One is Amazon, the other is Palantir, okay? There's a few other stocks that are kind of Amazon's just like, that's my number one focus of a stock I'm buying this year. It's been my number one focus. I've been buying this stock for 6+ months now, and I'm just relentlessly buying. Every single week, pretty much, I'm buying Amazon stock. And that's not likely going to stop this entire year. I'm going to pretty much buy Amazon stock almost every single week, okay? Palantir, I'm not buying every single week, but I'm buying a lot of Palantir shares, and I need to position as much into this as possible before S&P 500 inclusion. And so those are kind of my two main focuses. After that, PayPal, brand new position for me in the public account, obviously. I was in PayPal for a bit, then I sold out, quite a while back and took a smaller loss. Thank goodness I decided to do that. And then now I'm back in PayPal. I just got it back in PayPal very recently here. So that is a position I could definitely build into. Cheesecake Factory, definitely want to build into that one some more here. But I would put RH kind of in that realm, not as important as Amazon, not as important as Palantir, but it's kind of in that next tier down, okay? And so that's where I'm at with that one. And I love the long-term vision there. I'm willing to be patient. If this stock doesn't move for the next year because the luxury market continues to be weak, I'm perfectly fine with that. I don't need to make money over the next 12 months. I do want to make money in this one over the next 5 years. And that's where I'm at with this one. In terms of luxury home market, I don't see it getting much worse than 2023. I don't see it getting much worse, okay? If anything, I see it picking up quite a bit next year. Now, I know there's a lot of people that obviously have been, messaging me and whatnot and want me to speak about the Elon Musk massive interview they did on CNBC. I was actually watching that interview while I was prepping this video. I will likely do a big reaction on that later tonight on the Reaction channel. Jeremy Lefebvre Makes Money. If you aren't subscribed over there, make sure you subscribe over there. That was a beast of an interview. They covered so many flipping flapjacks and subjects that didn't make sense for me to even cover that. That needs a whole dedicated video on the Reaction channel. So look for that likely later tonight. There was a lot there. It was so in-depth, it's ridiculous, okay? And I got the full interview. So I appreciate everybody. Much love, as always. Thanks for being subscribed, folks. Once again, if you make 6 figures a year or more and you want my free workshop that I put together last week, check out the pinned comment down there. That will be for access to that. Thanks so much for watching, and have a great day.